founder of OptionPit.com. Today on our State of the Market show, we're going to break down yesterday's sell-off and who was the culprit. We're going to talk about what's going on with Iran. We're going to look at PPI and how it relates to the bond market. We're going to talk SpaceX, Oracle, and much, much more. It's going to be a great show. So, Amin, please roll those credits. Good morning. Good. It's great to see everybody. Folks on YouTube, folks on Twitter watching me right now, or X, excuse me. Please give me that like and subscribe. If you're on X, give me a heart. And if you'd like to join us live, join the discussion. There are hundreds of people here talking to each other about the news stories that we're hitting on, and I'm looking at their comments and when we see something insightful, we bring that up. So make sure you join us. If you want to join the party, you can email my team, support@optionpit.com. Folks, as we start the show, the Dow Jones Industrial Average is up 0.75%, $380. The S&P is up about the same, up $52. Big push out of the triple Q, up 1.65%. IWM up 1.63%, and SMH, which has been our canary in the coal mine, right? Folks, when SMH has gone up, the market's gone up. When SMH has gone down, so has the market. This morning, it is up about 4.5%. Folks, SMH is your leader. At any given time, there is one index or one ETF, or sometimes even one stock that you want to be paying attention to because it's really telling the story of the market. And right now, the story of the market is coming from semiconductors and SMH. So SMH needs to be on your ETFs to watch if it's not already. The PPI numbers came out today. This is the producer price index. This is kind of a leading indicator to the CPI, the consumer price index. PPI stands for producer price index. It's how much manufacturers pay for their stuff. So how much did U.S. Steel pay for the stuff that their iron and the stuff that goes into their steel production? And then how much did General Motors pay for the steel to make cars? How much did Goodyear pay to buy its rubber? And how much did Ford pay? Well, Ford uses Firestone. How much did Chrysler pay for the Goodyear tires on their tires? And so on. So producer price index, if the cost of goods going into an automobile or a backhoe or a shovel or an oven, you name it, if those costs are going up, eventually that trickles through into the consumer. And we've seen PPI make a big pop, came in 6.5% year over year. The estimate was 6.4. The month over month, 1.1% over an estimate 0.07. Core 4.9 versus an estimated 5.4. There's your positives. And PPI core 0.4 versus an estimated 0.5. So what does that tell you? This is all energy. It is all energy. Right? Core removes energy from the equation, and that came in light. Still almost 5%, but it did come in light. Energy is really the driver behind all of this. And, you know, when inflation is higher, that goes into the bond market. The bond market reacts to it. How the bond market reacts then flows into the stock market. Remember, the bond market is about 40 times the size of the stock market. Even with these huge moves in the stock market, the bond market is that much bigger. So IEF is actually up, and that's probably reacting to that core PPI number. So with IEF up, that does give the market a little bit of footing to stand on. It's sitting here bumping up against the 21-day moving average and the 9-day moving average. TLT, long-term rates, also up, kind of bouncing right on its 9-day simple moving average. If we want to look at what's going on with the CME and see the CME Fed Watch tool, going out to December, we have seen things continue to deteriorate. They now have almost a 45% chance of one rate hike, and we're sitting at just under 25% of 2 rate hikes or more between now and December. That is eventually going to become a problem for the market. But right now, we're still up, but I don't like what I'm seeing out of the Fed funds rates, and it becomes a problem. Other markets that we're paying close attention to, USO, and of course, which is down a touch, and the VIX, which is down, but that futures term structure, we are in the mass confusion setup. The mass confusion setup tells us, hey, VIX is above those front month futures, but the whole curve is in contango. That leads to wild moves. Absolutely wild moves. All right. Now, one interesting tidbit with oil. On one hand, the administration is saying, hey, we're still trying to get a deal. And then this morning, you have President Trump saying they're going to get hit hard tonight, and we're eventually going to take Carg Island. At the same time, you have Iran, who's clearly reading social media, saying we're going to attack targets owned by Elon Musk, literally the day before the SpaceX IPO. If anything, these people are excellent at scrolling through TikTok and Instagram. As it stands right now, this Iran news remains on the back burner. It does. But one way or the other, if this thing really does heat up and we put troops on the ground, I think you're going to get a move out of the market. If there's a peace deal, I think you'll get a move out of the market before I think maybe we still eventually roll over. This Iran news is still something to watch. And what it tells me is that this is a trader's market, and noticeably a day trader's market. The pattern day trading rule is gone. And in Project Next, that now gives us the ability to wait and not have to trade the night before and trade the day of. And Leisha executed one of those yesterday to the tune of over 90% in NVIDIA. She bought puts. She bought puts in NVIDIA yesterday morning, closed them yesterday afternoon. Folks, the advantages of 0 DTE and 1 DTE right now, this is the story. It is the story of in terms of how to actually attack this market day after day. There are some really good strategies that can work week after week. But this 0 DTE story, we've been out front of it for years. And this is developing and getting bigger. And we're going to be talking about this more and more. So as these opportunities pop up, and there are several new ones coming, you are going to want to make sure that you're here every day as I update you on what we're seeing. Speaking of seeing and chips, I want to pivot back to the SMH story and the chip story and Iran, and talk a little bit about SpaceX. And to help me with this, I'm bringing on our own Andrew Giovinazzi. Andrew's going to be going live here in about 45 minutes to break down SpaceX. Was that a chicken?
Rooster.
Oh, how dare I?
The rooster camps outside of my office and just does its rooster thing. I don't know quite know. I'm doing this now, or I would shoo it away.
Well, I mean, you know what? He's just giving us he's just letting us know that the market's rolling over.
Yeah, I'm closing. I'm going to close the windows.
Yeah, roosters cockadoodle do at two things, folks. One, the rising sun, and two, a market that's looking like it might roll over.
Yeah.
Andrew, I've got a lot that I want to hit up with you, but I want to start with this chip sell-off. And one thing that's interesting is every time we've seen kind of a new bit of Iran news, they go straight for selling semiconductors. And, I advanced a couple of different ideas yesterday as to why this would happen. But, what the heck does Iran have to do with softness in the semiconductors?
Well, I think it's, you and I both way back when, trading floor days, funds tend to sell the good stuff, the stuff that's up a lot. And because want to raise cash. And I think mostly the Iran thing always brings kind of a new level of, let's just call it uncertainty. Oil prices, margin squeeze, interest rate squeezes, all that stuff. So they, it just historically, funds tend to sell all of the good stuff thinking they could go buy it back later. And mostly because there could be opportunities somewhere else as rates blow up or oil blows up. And it's mostly just moving money from something that was productive. And when you have instability, market doesn't like instability, so they're going to sell the good stuff until it kind of goes away. They can always buy it back. So, and generally, the good stuff is more liquid. Like SanDisk liquid, MU liquid, Intel. This year anyway, there's more. It's an easier way to raise money fast that they could always buy back later. So, I think that's part of the reason why. And the Iran thing takes a chunk of upside up if everybody's still involved in it. Like the market pretty much rallied on a deal and we didn't get the deal. There's no deal yet. And you were just saying we're rolling over. It's likely, at this point, it looks like, we'll at least be down on the day once again.
Never trust when we're in a bear market, never trust a rally in the first hour. You actually want to open down. When we recover, we open down and then rally. We don't open up. Speaking of raising dollars, Oracle comes out with good earnings and then announces they're going to do a $20 billion capital raise.
And this is what happened last summer, right? Do you remember? Oracle was $350 or something like that. And they announced and we got to raise some money. And everybody's like, whoa, wait a minute. You got to raise money when you're making all this money? That doesn't make any sense. But Google's doing this. And you're seeing, I think what's going on is these firms see the future. It's just right now they're going to have to invest. But once again, you said this the last year, like all these stocks are priced for perfection. And when they don't give you that kind of, when the reality hits that they might have to spend some money, investors just smack them. And what Oracle probably had record earnings again, right?
Yeah, Oracle
20% revenue growth.
I know. Oracle would have done themselves a favor doing the capital raise back in October rather than buying back their stock.
Yeah.
Like you and I, was that you and I that were talking like Google may be the first company in history to sell its own stock at the top rather than be buying it back. I want to write
it's your least favorite thing.
All right, CFO of Google. 1 minute. I'm gonna get his name. All right. The CFO of Google is Annette Ashkenazi. Annette Ashkenazi. This is an open message to you. I want you to know you belong on the Mount Rushmore of CFOs. You may be the single most brilliant CFO in history. No CFO prior to you has been smart enough ever to sell his own stock at the top, and you, sir, did it. Congratulations, Annette. You are
Didn't even think twice
a
about
national treasure and a national hero. Congratulations, Annette.
That's one.
So, are there any of these? And then I want to move on to our next subject. But are there any of these chip stocks that you're actually looking to accumulate at this point? Have you found any of these at a price level that is starting to look attractive to you? And if not, like, what are you waiting for to start accumulating some of these different stocks?
I've mostly been selling all of my chip stocks. I have a little SMH left now, and I have some Qualcomm, mostly because I got the Qualcomm when it was ridiculously low. And that, by the way, that was only like 2 months ago. It wasn't any like genius thing. It was like, why are all these other chip stocks here and Qualcomm is here? It just made no sense at all. So I'm not looking at anything until it retraces like 25%, to be quite honest. I think the chip, they're expecting huge growth. They'll likely get huge growth, but they're already priced for huge, like they're already 10x. So for every stock that's priced where it is, it has to increase earnings 15 to 20% revenue, 15 to 20% a year for the next 5 to 10 years, because they're already trading at 10 times revenue. And by the way, they're not great. It's not that they're not great companies and they're not growing, but that's a lot of years of having really big revenue growth when, think of it this way. How many years is Google going to do a capital raise to buy chips and all the stuff they need? Is it going to be next year, the year after, the year after? So these are all, I'm not going to say they're signs of a top, but it's at least for that sector, it might start to cool off just a little bit. And I think that, when you have news like Iran and everything else, it makes it easier to sell a stock that is up 300% this year. You can let some go. It's okay. And by the way, but if SanDisk trades like $1,000 again, I'm like, okay, I would do that. And these are the things you see and you don't, and everybody's looking at them now. There's no way those prices get there, right? No way. And then they get there.
So it can happen.
Yeah. And you just have to be ready. So, and then when it's there, you have to do it. That's the next thing. You're like, okay, I want to hide under my desk because all my chip stocks are getting annihilated. And you're like, well, okay. You just, and that's basically what I did in March and April. It's like I always tell my students, all the students in my classes, okay, market's down a lot. This is where I start buying stupid stocks every week. I don't really think about it. I just make sure that I'm a buyer. Some SPY, sometimes some Qs, some of the stocks that I like Qualcomm, even Oracle was one. I think it was like 150 or something. So, and that's another thing. It went to 250. I didn't sell it. Now it's back to 170. I'm like, oh, well, so you have to be, again, you have to be ready. And now that we're back into possibly into this Iran on again, off again thing, the market's going to get volatile again. We were not volatile for the last 6 to 7 weeks, right? We were rolling up.
No.
Earnings were fantastic, and they were fantastic. And now, now there's some flies in the ointment. Rates could be going up, oil prices going back up, Iran, again, a mess. Certainly not solved. So these are all, and all of a sudden VIX goes from 15 to 21 in a week. So that, again, it lends itself to these 2 to 3% moves per day that we weren't getting. And all of a sudden they just reappeared again out of nowhere, but for good reason.
Yeah. Speaking of things that are going to be a mess, not the IPO itself, but the trading afterwards, SpaceX, SpaceX becomes a publicly traded company tomorrow. News out today. All right, Andrew, they're raising $75 billion, correct?
Yep.
There's over $70 billion in retail subscribed. $70 billion in retail subscribed to the SpaceX IPO. That means folks listening here, you have subscribed to try and buy the SpaceX IPO. Actually, I'm interested in this, Andrew. We've got hundreds of people here. If you have put in to purchase the SpaceX IPO through your broker, right? Schwab, you can do it. Fidelity. I would love to know. Now, obviously, let me know. Put in a 1 if you have. To everybody, type in a 1 if you have put in to get shares of the SpaceX IPO. Folks watching on YouTube and on X, I am seeing a sea of 1s. Let's just put it this way. And then I'm definitely seeing some not me's and I wishes, and some zeros as well. But folks, there is real retail demand for this, and this thing may launch at who knows what price. I'd be interested to see where this would have. And I don't want to go down this rabbit hole, but can you imagine if they did like a Dutch auction for this thing?
Right. Isn't that what they did? I can't remember. Was that a Google? Did they do a Dutch auction for Google?
They tried to get Dutch auction.
Right.
Yeah.
They tried to get around Wall Street. I remember. So.
Yeah, that was a little inside baseball for being live here. If you ever want to know about a Dutch auction, I'm happy to explain it sometime. But Andrew, so we've got and 70 billion retail. You look at our chat here at Option Pit. Lots and lots of 1s. Also a lot of zeros. People saying no. Have you seen IPOs like this before? I mean, obviously this is the biggest in history, but have you seen similar excitement around these?
When Robinhood IPO'd, there was like, I think there was some because Robinhood IPO'd, I think in the top of the like the meme era. So there was excitement around it, drove the stock price crazy high. And then that stock price eventually went back to $9 and then back to 150. Also Meta. Well, I hate saying Meta, Facebook, right?
Facebook
IPO,
it was Facebook at the time.
Yeah. And it launched, literally, and then it peaked and then went straight down for I don't know how many months. And traded in the teens, literally in the teens. The stock's $600 now. So, the IPO isn't necessarily, a great time to get in, because historically most IPOs do retrace somewhat, and then the companies do quite well after that. So, but I think the thing with Tesla and SpaceX right now, and Elon Musk is this is it's a seminal thing. It's the first, I'm going to say AI company to go public because, they folded Grok and Twitter and everything else into SpaceX. So it has robots, it has AI, it has all the money that they're spending on, data centers in space, whatever, right? It's so enormous. And a successful IPO could lift the market significantly tomorrow. Like, that's another thing. Like, everybody will be so excited and like, wow, there's so many other things coming, and look at how much money I could make in an IPO on day one. It could likely, right, draw a lot of huge interest.
Yeah.
And then you got next week. Next week's like, okay, we're there's no news. There's no news, and we're sitting and watching it.
And now you have developed a trade that doesn't require SpaceX, that feeds upon how you perceive SpaceX is going to move. And the funny part is, if you're incorrect and it moves opposite of you, you actually make more. You're about to, in 29 minutes, with Hannah, walk through the entirety of the thesis, how the trade works, and how you expect things to play out. And everybody's invited to attend.
Correct.
That's today at 11 a.m. Folks listening to me live, I want you to click this link and register if you're not already registered, because this is going to be something you don't want to miss. You're getting the education and actual ideas from Andrew. So Andrew and Hannah, I want you guys to click right here and join 28 minutes from now. No cost. And if you're watching me on YouTube or on X, give my team an email, support@optionship.com. And again, like and subscribe. Andrew, thanks so much for being here today.
You're welcome.
So for Andrew Giovinazzi, our Director of Education and Head of Option Trading, I am Mark Sebastian. I am your only option. I'll be back tomorrow with you at 10 a.m. as I am every day. Thank you for being here. And of course, thank you, Amin. Thanks, Amin. Have a good one, everybody.